I just put half of my life savings in the market a couple of days ago. About more than a week ago, I put a decent amount of my savings into large blue chips, some semiconductor stocks, and a couple of well-known ETFs. I originally had bought up my positions taking into account that when I had bought them they were already at lower levels compared to earlier in the year. Due to the fact that all my positions have gone down in recent days, I am down about 20. I plan on pumping money into my account each month as I'm looking to invest for the long term. I'm thinking at least 10 years. But these short-term losses have definitely come up as a scare. Have I made a mistake? I find it quite inevitable that the market will continue to carry over a bearish sentiment. But are losses like this normal? Or have I missed out on the dip? Any information or experience is honestly greatly appreciated. Thanks in advance. Zoom out and continue adding to VTI. If you put money in individual stocks, then your best bet would be to pray to your favorite god. If you don't believe in God, then pray to Kim Kardashian. Seriously, don't invest in individual stocks. Dollar cost average into a low-cost index fund such as VTI and hold for longer term. Good luck. You have to be lucky to time the market. I wouldn't worry unless you invested in something risky. It is depressing to see your stuff drop or barely make any gains after years. Many of us have been there. Have I made a mistake? If you're 55 years old, yeah, you have. If you're 25 years old, nope. What specific stocks did you choose? As a benchmark, VQQQ have only gone down by less than 5 over the past few weeks month. It sounds like you are under diversified. The market is only down about 5 over the past couple weeks. So being down 20 is not really normal, and there is no reason to believe your portfolio is going to recover. Moreover, the fact that you are rattled by these losses suggests that you had a poor understanding of the amount of risk that you were taking, and it increases the likelihood that you will destroy your wealth by making emotion-driven decisions. The smartest decision you can make now is to accept your losses. Choose a more risk-appropriate portfolio, and steadily contribute to it over the long term. Best to keep buying and continuing buying if you don't need this money until 20Y. That's how you build long-term wealth. Don't worry about red. It's just paper loss. You actually want the market to suck for the next 10Y so you can buy in cheaper. It'll be stressful. If you're not in options, just hold. Things could go down a lot more. Just add what you can. Nobody knows what will happen. I am down a significant amount. Pharma biotech investor. Don't stare at charts and your phone all day or it'll hurt your mental health. Major index is down like 5 and you are down 20. Gambling isn't investing. If you want to play long term, just buy into SP 500 index funds. As long as your life savings are $1,000, you'll be fine. I smell TQQ. Just one of the downsides of lump sum investing. Over the long run it usually turns out fine. Personally, I would stick to the broad indexes, like VU and QQQM, rather than trying to play sectors and individual stocks. What did you buy, if you don't mind asking? What you're experiencing is called wanting to time the market. Just continue to DCA whether the stocks go up or down. I tried to time the market and wanting to catch the absolute bottom and ended up losing money. Buying at higher price. You're investing for at a 10-year horizon, but panicking after a week or two. There's your problem. This is typically why you don't go balls deep like this in one day. The chances of you timing a bottom are very low. Better to wait and keep buying periodically on dips instead. It's too late now though. You should hold and not panic sell. As long as you bought reasonable securities and not penny stocks. I bought PayPal and after that it dropped 10 more. That how it works. If market drops more, I buy more. 20 is nothing. Keep your head up. The best time to invest was yesterday. This isn't a dig at October 25th being the best day. That phrase is unchanged. Every day. Forever. Don't sweat it. In 30 years you won't remember. If you put your life savings into the market a day before the 2008 GFC, you'd still be up by a lot today. Time is your friend. Just be sure that you're invested into quality ETFs. We really need to step up economics classes in schools. You need head, boglehead cold sweat smile. Down 20 in a week? What did you buy? Markets were down 2-3 over the past week. It sounds to me like you bought some high-risk assets. If you are patient, you will be happy to hold long-term from these levels. No mistake. The market will go back down. In the meantime, you are buying stocks at a discount. I lost 40 of my net worth in 2008. By 2010 it was all back. Time in the market, timing the market. I don't think you made a long as you are ready to double down when the market tanks, and I would say that's likely. If you invested in a broad index fund, you're fine. Let it ride. If you invested in specific stocks, even the big ones that you think are too big to fail, then you're just gambling. The conventional wisdom is time in the market beats timing the market. In the long run, it should be fine. It's a marathon, not a sprint. For individual stocks, I use 30 as my loss tolerance. So if an individual position hits 30, I sell. Also, I wait 3 years to see how the position is doing versus the market. Generally IVV. If I'm underperforming, I sell. I don't buy too many individual stocks anymore because it hurts being down more than the SP when a bear market hits. I just want market returns these days. We are in a recession. You might want to slow down on the large purchases. Don't try to buy dips. If you're needing to put a substantial sum in, do it a month at a time, spread over 12-18 months. Stick to blue chip growth stocks for now. If stock picking, you need volatility and volume on your side long term. Should have sold cash secured puts lol. You be a long germ inviator, so don't worry about the daily ups and downs in the market. Ignore it. Markets go up and down. What you don't want to do is sell and lock in losses. First rule: whatever is left after paying basic life necessity, you define what is that for yourself. Save 75 of that in retirement or rainy day funds, then do whatever you heart want with rest of the money. It could have been better if you dollar cost average. Quit trying to make crazy returns. Long-term investing should be slow, steady, and almost boring. Tax advantage accounts: 401k and IRA. Keep your cash in short-term bonds or HYSA or something safe. Stay away from taxable brokerage accounts. Not worth gambling your hard-earned cash if you don't know what you're doing. Looking and measuring daily is not wise. Find something more productive with the time and keep investing regularly. You'll be happy in the long run. When investing, have I made a mistake? Is an irrelevant question. The only relevant question is, what is my best path forward? Your situation, although I don't see a 20 drop recently, is the reason for DCA. If you can't handle a couple days of volatility, maybe choose a less risky option. If not, just ignore the short-term noise and hold on for the long term.